In this episode of Leibel On Fire, we'll examine the hidden fees commonly found in annuity contracts, including mortality and expense charges, surrender penalties, and other costs. We'll explain how these fees work, how they vary across different types of annuities, and the impact they can have on your retirement income. The discussion will also cover what to look for before purchasing an annuity and the options that exist if you already own one.
Welcome to Leibel On Fire with Amazon best-selling author and Yields for You portfolio manager, Leibel Sternbach. Leibel On Fire is supported by our ETFs, Yields for You Strategy A and Relative Strength Managed Volatility. Our mission is to help 1 million people retire with financial security. Now, the Financial Independence and Retirement Show dedicated to helping you build the life of your dreams as fast as possible with as little stress as possible. It's Leibel On Fire.
Hello again and welcome to Leibel On Fire. I'm Freddie Bell with you today, and Leibel Sternbach is here. So what can retirees do, Leibel, to protect themselves against these high costs or hidden costs before purchasing an annuity in the first place, even though some of these riders, as you've just mentioned, can have a benefit for the retiree?
Yeah, so the first thing that you got to understand, right, is that you're never going to fully understand all the fees. There's no way to know 100% what the fees are, because the way the contracts are written is that they're subject to change. They can change those values on you not at any point, but they have points where they can change what those fees are, and that completely, changes the game in their favor. So having said the fact that there's no way to know beforehand what your maximum possible fee is, what you need to do, right, is ask the insurance company or your insurance agent. You ask them for guaranteed values. I want to know, if the worst case were to happen and I earn zero on this policy, what is the benefit that I'm getting? What am I paying for in a worst case scenario? Your insurance agent is going to fight you tooth and nail on giving you that illustration. And it is the thing that I demand of everybody who ever pitches any type of product to me, is I want to see the worst case scenario, and you need to make sure that the worst case scenario is something that you would still say, yes, this is something I want to buy. And sometimes that is the case. Sometimes that is absolutely the case, that you look at it and you go, I really need protection X and I'm willing to pay Y for it, and that price is reasonable for it, and go for it, right? Other times you look at it and you'll say, you know what, maybe I'll just self-insure on this one, right? Maybe it's not really worth giving up all that upside in order to get this protection. But you got to really look at the numbers and see, what if the worst case scenario were to happen, is it worth it? If the worst case scenario is not an okay scenario for you, then you got to start digging in and seeing, okay, you know what, maybe there's some room to play here, but generally speaking, it's usually not worth exploring.
Interesting. We're talking about annuity pitfalls and what to look for. You mentioned the questions. So are there other warning signs that retirees or people investing in this instrument should be aware of?
Yeah, the questions that you got to ask of any policy is, number one, what is the worst case scenario? Number two, what happens if I die, right? What happens if I die? Does my spouse get to take over the contract as if I were still alive? And that's a very important question, because I've seen different mechanics for how that happens. Some contracts are, yes, no problem, your spouse gets to take it over just as if you were alive. Most of the time, that's not the case, and there's some caveat to it. Sometimes it'll be, we pay out the death benefit and then she can get a new contract, which is like, no. I got all this theoretical value tied up in here, which you can't surrender and you won't pay out as a death benefit, this theoretical living benefits. I want the living benefits. That's what I'm investing in this thing for. Mm-hmm. And if she's not going to get it, if I die, a day before we're going to turn on income, right, or whatever, or long-term care, then what was the purpose? All of a sudden, we just put money down the toilet and got nothing in return for it. So you really got to ask that question. You got to shop around, because it is, the thing to keep in mind, 70% of insurance policies elapse without payment. And so something happens and then the insurance company makes out, right? And so you're playing against the house, right? Is it possible to win? You go to Vegas, is it possible to win? Yes, absolutely. 49% of the people win. You just need to make sure that you're the 49% that win and not the 51% that lose. The insurance company is not going to care whether you're the 49% because they've got the 51%. And with insurance, it's a lot more than 51% because they're not, regulated by a gaming commission. So
finally, what strategies can I do? What can retirees do if they're already locked into an annuity right now? Is there a strategy available to us?
Yeah. So if you've got a policy and you don't like what is happening, right? You don't like the outcome. You were promised the moon and you're getting a little sticker on your window. You're getting a fraction of what you were told. Then what you want to do is you want to start shopping around for replacements. Sometimes you need to move it into what's called, low cost fee based annuities. And so these are where the annuity company, basically the life insurance company, has stripped out all of the insurance component of it. And all they're selling you is essentially a tax wrapper, right? They're giving you their tax letter, their tax shelter that they worked really hard to get so that you don't have to pay income tax when you take the money out of this annuity. In exchange, they're going to give you the ability to basically invest in the market. And I say basically because just like with everything with insurance companies, they're making money somehow, right? If they're not making on the mortality and administration fees, they're making on the investment component. And the investment component, some of them take a small bite of the apple. Some of them take a bigger bite of the apple. There are a few companies that I work with. I help people kind of move out of these policies where they take a tiny bite of the apple. And okay, so you went from losing, 2-3%, maybe more to the annuity company to losing a fraction of a percent. And now you're getting basically market returns. So there's always things to shop around. If you do want the living benefits, if you wanted income for life, if you wanted long-term care, right? If you wanted a death benefit for your surviving spouse or for your kids, then there are always policies to look around with. During times of market volatility, the annuity companies are constantly trying to induce people to switch. So it's just a matter of figuring out surrender charge versus, the guaranteed upside, the guaranteed performance that you're going to get contractually guaranteed. And is it worth doing that switch?
Boy, what a great primer. Is there more information at yieldsforyou.com, Leibel?
Yep. A ton of information at yieldsforyou.com. And of course, right, we have our free retirement tax SWOT analysis. So if you want us to help take a look at your policies and give you our 2 cents on what we think you should do with it, with the caveat being that we don't sell life insurance, we'll help you get out of policies if you're unhappy with it, but we don't sell these things. So we will give you kind of unbiased advice in terms of, is it something worth keeping or not keeping?
Leibel's website is yields4u.com. We got to leave it right there, but I want to remind you that in this episode, we explore the hidden fees in annuities. They include mortality and expense charges, surrender penalties, and rider costs, and how they affect long-term income. We also discussed how these fees vary by annuity type and what types of steps that we can take as retirees to evaluate, to adjust, and make a good, solid move on the existing contracts that we might have. Understanding these details, they're very important to making informed retirement decisions. I'm Freddie Bell for Leibel Sternbach on this edition of Leibel On Fire.
If you would like to see how the Yields for You team can help you get off the Wall Street roller coaster and save you money on taxes so you can live the life of your dreams, book an appointment online at yieldsforyou.com or call 410-914-4894.
Yields for You is a registered investment advisor in the state of New York and only transacts business in states where the firm is properly registered or is excluded or exempted from registration requirements. Registration as an investment advisor is not an endorsement. Information presented on this program is believed to be factual and up to date, but we do not guarantee its accuracy, and it should not be regarded as a complete analysis of the subjects discussed. Discussion should not be construed as an offer to buy or sell or solicitation of any offer to buy or sell the investments mentioned. Annuity guarantees are subject to the claims paying ability of the issuing insurance company. Content should not be viewed as legal or tax advice. Always consult an attorney or tax professional regarding your specific legal or tax situation.